Show me those teeth, babe.
Well, you know what? I just ate some barbecue, so you probably look like crap.
Yeah, those pearly whites.
What's happening, everybody? This is the Flow Show. You got your boys, Steve Straza, Sean McLaughlin. What's happening? Straza, how you doing, buddy?
Not much. I think we took a week off, so I've missed you. We have a lot to catch up on. And
Well, you're not wearing your bull market shirt today, but I was about to, before we went live, I was about to tweet it, but I figured, you know what? I'll just save it for the show because it triggers so many people. It's a bull market, you know?
Yeah. So this is like a derivative of a bull market shirt, literally. You know what I want. You know, we're trying to sell puts naked.
Puts naked. You're living it.
So, and it's funny, like I was talking to the analyst squad this morning, and we do a lot of like bottoms up scans here. I don't need to tell you that. And I was saying, guys, like we're at the point now where I want to have 4 or 5 setups from each list. More, you know, less is not more anymore. We're not in 2021 or 2022 anymore. Like this is the time to be aggressive. Let's put some trades on. Let's find these bullish chart setups. God, it's been like 2 years since we've had a conversation like that. But it's good, you know, when we're doing these scans, when we're looking through our options list or any other list, we're looking more aggressively. You know, mean reversion setups that I would have said no way to a year ago. I'm saying, let's go. Let's put it on.
Yeah, you were saying right before we went live that like all the shittiest stocks are having the biggest runs right now.
You know, I think Carvana is like the best example, right? I mean, this thing is literally, talk to any smart person, any fundamental person, this thing is a zero. Well, it's tripled in a few weeks now, right? So like you're seeing the heavily shorted stocks, you're seeing the most beat up names really rip. So call it a dash for trash, call it a dead cat bounce. I don't know, but I don't think it's a bad thing to see some of the most beat up and worse stocks trending well, right?
Is that a sign that animal spirits are alive and well?
It is. That's I think the best way to analyze like that piece of information is just this can't be a negative for risk appetite, right? You know, if they're out there buying the worst stuff, that's an environment where I want to be more aggressive.
For sure. So that said, let's dig into the follow the flow scan from this week. Anything on there standing out that is in line with this theme of aggression?
A lot, actually. And it's not uncommon, right, to see junky names, speculative names get options flow. A lot of times you can express a thesis better through the options market than through common stock, you know, with a lot of these high flyers. But just look at the top of our list. We got Unity Software. You know, that's an ARC name. Paramount Global is one of those streaming services that has been annihilated. Elastic, another ARC name. Warner Bros. Discovery, you got that streaming theme. We'll talk about it. Salesforce, it's been beat up as much as any big tech stock, right? AI. I think this is kind of in line with that whole AI theme right now. AI is really hot. ChatGPT put it all back on everyone's radar after we forgot about it for 5 years. So this vehicle AI, C3.ai Inc. or whatever, this one's getting a lot of buzz. And then Farfetch, which is an internet retail name. So a lot of retail, a lot of growth, a lot of ARChy stuff on this week's list. I think we could start with Farfetch because we didn't do this last week. We put a trade on Farfetch actually through our follow scan. And this is exactly what I'm talking about, right? This is a great example of something I would have last year said, we're not touching this with a 10-foot pole. In this environment today, okay, we have a clearly defined level, you know, to get long against. As long as my risk is well defined, I want to take shots at even stocks that look like this.
So
crazy.
Let me back you up there a sec. What's the clearly defined level you're looking at Farfetch? Because what I'm looking at here looks like that level's about what, 350?
Yeah, those no. Those COVID lows. I got it up on my screen here. So you got the 2020 lows.
Okay.
With the shelf of lows here about 6.
All right, that makes more sense because I was going to say, are you leaning against that low from a few weeks ago? Because if so, that's 50% from here.
Right. No, I'm zooming way out on this one, and I think the squeeze could be on. Like I just talked about with stuff like Carvana, we're seeing these heavily shorted names. Farfetch is one of them. We wrote about this one in our short squeeze report a month or two ago. These are the names that are working. right? I'm not saying to own this forever. I'm not saying to, buy it and tuck it away into your IRA and never look at it again. But I'm saying there could be a really nice trade in names like this. And it seems like options participants are agreeing.
Well, what's notable to me about this call action activity in Farfetch is that they are February 10th expiration calls. So this is not an earnings bet because they do have earnings coming up on the horizon next month, but the earnings are scheduled for the 23rd of February. So this is not an earnings bet. This is someone who is making a short-term call. I mean, whew.
Could it be like sometimes stocks, make moves and start to price in earnings ahead of time? Maybe that's an aggressive thought, right? Because it's what a week.
My thought is, and I'm just going to play devil's advocate here. Is I'm looking at that chart that you've got up, and that the level that we're at, just below where we're at right now, so we're right around $6 is that significant level that was support back in 2020, early 2022. And my thought is that someone is this is going to sound crazy, Straza, but someone here is cautiously bullish. They're aware that we could go back and test those lows from earlier in the last month or 2 months ago, but they could cheaply play continued upside from here by buying these February 10th expiration calls. I mean, what are those things trading at? They can't be trading at a whole lot. Let me pull it up right here real quick.
And I like that. I think that's the right way to think right now.
Yeah. So, I mean, look, those February 10th 7-strike calls. I mean, today you could buy them for 34 cents. So you're not committing a whole lot of capital to, play for a continuation here. But if you're wrong, you're not going to get hurt too hard.
So if you're wrong,
I kind of like it.
If you're wrong, you pay the premium in something like this. If you're right, just to put things in perspective, over the trailing month or so, Farfetch is up about 100%. So this is a stock that can double in a matter of weeks. So it might make sense to put on, an options trade like that, right?
Yeah. I mean, look, 34 cents, maybe I should dial that back just a little bit. It sounds cheap, right? But pulling up my trusty calculator here, 34 cents is, well, hold on, divided by 7. That's
stock.
It's 5% of the value of the stock. Right. So a 5% premium for an option that has 10 days expiration. I mean,
no earnings event on the horizon. Yeah. But these are the types of stocks that people that we're seeing options flow in right now. It's a lot of these types. Here, let's look at another one.
For the final word on Farfetch, for my money, it's a no trade. I don't like it. For me, not saying it can't work, but I don't like it.
Sean's out. All right, we'll stick to the
I'm a seller.
We're in from, I think, 650 to 1280, but we're not up against any time limit. We're looking at like 1 to 3 months on that one.
All right.
Paramount. These streaming services that have been hit so hard. I mean, here's a look at Paramount Global. If you watch Yellowstone or whatever they have.
Love Yellowstone. Great show.
Right. It's fallen off a little bit though.
This current season is it's a little too much Beth in capital letters instead of just Beth, if you know what I mean.
She went from being one of the best characters on TV to one of the worst characters on TV.
I feel like they've taken her character and like just dialed it to an 11, and it's like it's too much.
Yeah. Couldn't agree more. Anyway, they really burst onto the scene with that show. They're doing good things over there. It seems like the stuff is working. It's a tough space. It's a really competitive space. You can't really look at any of these streaming companies. Maybe Netflix has been working in the near term, but they're all pretty beat up when you zoom out. So we had both Paramount and Warner Bros. Discovery on our list. Warner Bros. Is really still a falling knife, in my opinion. Paramount, not too much better, but there's stuff to like in the relative trend, right? So if you look in our lower pane here, we retested kilos on a relative basis, and now we're hooking higher, almost like we're squeezing higher in relative terms. So I think, this is a logical level. We could define our risk right here just above those COVID lows, call it 1540, and hope for an upside move. I don't know. What are you seeing from the implied?
Well, the one thing, I mean, I don't disagree with what you're saying, but the one thing that gives me pause, at least for right now, is we've got earnings coming up on February 16. So that makes it a no play for me, but I know I'm not everybody, but I would rather let that get out of the way first. Which, by the way, for those of you tuning in and watching Straz and I go through this is how the sausage is made here at All Star Charts. We kick ideas back and forth, and we either like it or we don't like it. We've talked about why we don't like it. So you're getting kind of an inside look at how we go about putting trades on. It's not always pretty. It's not always fun, but hey, I mean, here it is. Straz just threw up 2 ideas, and I said, no, not for me. Crap.
But early season, you make a good point. It adds another layer, right, for us where we have to be extra careful, and we're right in the heart of it now. So every time we toss an idea around, that's pretty much the first thing we look at. I got one for you that not only do I think earnings is a tailwind for this whole group right now, but earnings is behind it. Schlumberger. Let's take a look. I believe they just reported. Listen, ExxonMobil came out today. We're looking at the XLE. It's struggling at its pivot highs right now. Exxon just reported, record profits and sales. Again, I feel like they do that every quarter these days. But seeing Exxon kind of work higher, it's up, 2% today. Really nice candle, pressing on new all-time highs. Seeing Exxon react that way to their earnings report makes me feel good about where XLE is going, because that index is very much dominated by these major players, Exxon, Chevron.
Yep. And to your point, you were hinting at earlier, Schlumberger does have earnings out of the way, so that's good. And if you look at my chart, I've got the Schlumberger.
Impossible to say that name.
Try to say that one when you're sober. Anyway. What I love about this chart is look at this implied volatility, Straza. It just fell off a cliff. I mean, we are plumbing the depths, lowest levels we've been in over a year. So this is a great candidate if you're bullish to just keep it simple, buy calls, go out further than usual, maybe go 6 to 12 months out, because you can afford to take a better position when volatility is cheap like this.
Why do you think that just happened? Any idea? Like, it seems like volatility just fell off a cliff, like as soon as earnings got out of the way.
Well, I mean, I don't want to get all global macro on you. I'm certainly not a global macro expert, but in the oil space, there's always going to be a premium placed based on geopolitical risk, right? Headline risk, war risk, things like that. And I'm not saying that the Ukraine situation is near any kind of resolution, but it's not a new thing anymore.
Yeah,
the market's adjusting to it.
It's no longer something we talk about all day, every day, and come in every morning.
Right. It's less something to fear. Like this time last year, it was the fear of the unknown. Like, oh my goodness, what's happening here? What's going to happen? Europe's going to freeze. There's going to be no oil. There's going to be no gas. The whole world's falling apart. Now we've been with it, living with it for a year. It's like, okay, it's a bad situation, but there aren't any surprises, at least right now. There could always be a surprise, but it seems less surprising.
Great point. Another thing on Schlumberger, this is a good one. Like, if you're just looking for a broad bet on energy, I don't think there's many better ways to express that through an individual ticker right now. What do I mean by that? When you look at the subgroups in energy, the strongest by far right now is oil equipment and services, right? It's no longer the explorers and producers who led earlier in the cycle. It's no longer the large, multinational integrated names like Exxon and Chevron. They're still strong, but no longer the strongest. It's really equipment and services. And when you look within equipment and services, Schlumberger is really the bellwether, right? That's the big name. Maybe Halliburton you could throw in there too, but it's really Schlumberger. They're your Exxon of that industry. So I think this is a great vehicle. You're betting on the leadership group, and you're also picking, the bellwether in the space to do it.
Well, Straza, see what I have here? This is my trusty note-taking pen. Yep. I'm writing down Schlumberger on my little notepad right here that you can't see off screen. This might be my trade tomorrow. I like this trade. I like buying just calls here.
It doesn't look extended. When I look at that implied volatility, I love it.
Not only that, I feel like we could, it's trading right now at 56 and let's call it a little less than 57. I feel like we could place a nice stop loss level right below about $54. That's only $3 away. So we could really have a tight stop on this thing. And if we're wrong, we're gonna know pretty quickly, and it's not gonna hurt that much, especially with a risk-defined play like it just buying calls. I like this play a lot, actually. The more I think about it, the more I like it.
I think that's the move. I like it a lot. Also, I think with energy, I mean, a lot of these things have gone sideways or been slowly chopping, maybe grinding slightly higher for a year now. Schlumberger has a nice upward bias to it, but a lot of them, like if you just look at XLE, for example, the index, straight sideways for 7 or 8 months now. So I think a new leg higher could be underway for these guys sooner rather than later, but whether that takes a month or 3 months, we don't really know. So something like Schlumberger, if it's cheap, you can go a little further out, give it some time. But I guess I was wrong. We don't want to sell puts naked. We want to go long calls.
We want to go long calls. And the final thought here on this is I'm looking at the options chain in Schlumberger right now. I'm feeling like either August options or maybe January options give us a full year to take advantage of this low premium, low implied volatility. We could buy the 75 calls right now in Schlumberger for under $3 a contract.
And that's pretty much where, the Fibonacci measures out to 77.50. That's where we're looking.
Yeah.
Is that the 25 delta strike?
It is. It's approximately. It's got a 28 delta. Let's see, if we look in August, the 25 delta strike would be about the 70 strike, and we could get those for under $2.
It's not bad either.
Yeah. Actually, I think I like that a little bit better.
Further out.
What's that?
I'd rather go further out with something like this.
Yeah. All right. I'm not entirely sure that that's the strike I'm going to do, but if I do this trade tomorrow, which I think I might, Straz, I kind of like this one. I'm thinking these 75 calls paying a little under $3 might be the move. Stay tuned. JC and I may do a video about this one tomorrow.
I like it. And if you're following along at home to see what I mean, compare one of the oil services indexes. You could use XES or you can use OIH and look at what that looks like compared to something like XLE. It's already made new highs. It's holding those new highs. That's your leadership group. Schlumberger is a great way to play it. So let me know what you do.
All right, Straza. Well, there you go, folks. You just saw how the sausage is made. We finally agreed on a trade that we like, Schlumberger. So we'll figure it out maybe tomorrow. As always, enjoy your bull market.
Yeah. Happy turnaround Tuesday, everybody. We'll see you next week.
All right, everybody. Take care. We'll catch you next time.